This upcoming week could be the most volatile trading week for AMC stock that we have ever seen. And we're going to go over exactly why that is with the data points that are coming out this week, as well as that Evergrande situation. And I think a lot of people are really confused on what Evergrande has to do with AMC. So we're going to finally clear the air on that so everybody is made aware of this full situation. Also, we're going to go over the Ortex data, the Stock Tracker data, and the technical analysis towards the end of this video. But we're going to jump right in with all of the key information. The only thing that I ask is if you get value out of this video, drop that like on the video, as well as consider subscribing to the channel. Hit me down below in the comment sections. What is your prediction for this week? What do you think the Evergrande situation, or just Jerome Powell speaking and these key data points that are coming out, what do you think it will do for AMC stock? By doing all that, you help push this information out to as many people as possible, and I think they need to hear this specifically around Evergrande. So I pretty much think that all apes are in agreement here. The last thing that is missing for the AMC short squeeze to really force the big guys like Citadel to cover on their short positions is a stock market crash or correction. Let me know down below in the comment section if you guys are still confused of why that would actually happen, why that would cause the big guys like Citadel to be forced to cover. But essentially, Citadel has $450 billion of assets under management. Several other big shorts have hundreds of billions of dollars in assets under management, or AKA in their portfolio values. Now, if AMC were to go to $1,000, $5,000, $10,000, they could just deposit more money from their portfolio into their AMC short positions as collateral, pay the 3 to 5% cost to borrow, and never have to cover on their positions. But the best way to look at this is if the overall market goes down, let's say 50%, just to be extreme. I don't think that's going to happen. But if the market came down 50%, on average, hedge funds should lose about 50%, unless they are hedged out very well and obviously make a lot of money off of that, but that's typically not going to happen. Let's say their portfolios drop 50%, so their values just got slashed in half, and at the same time, think about this like a staircase, right? Think about the smaller liquidity hedge funds at the bottom, the big guys like Citadel at the very top. As AMC does start to get speed, as we know they have a negative beta, but as the market goes down, that's that crunch of liquidity. And the smaller hedge funds, they're going to be the first ones that do start to cover. And I'm going to give you guys the example of this, how this did happen in June, and how we know this is actually how it would play out. But essentially, you're going to see the smaller guys covering up to the middle guys that would likely be forced to cover, and then the big guys that would eventually be forced to cover as the overall market does go down. And like I said, you're seeing that liquidity crunch. But we also obviously did see this back in June. Take a look at the Ortex data. When we did go from about $12 all the way up to about $80, you didn't see the short interest go down all too much. Back here, the settlement date for May 28th was 20%. Back here, after this gamma squeeze effect, settlement date June 30th, the short interest was still 14.76%. So you've seen a very small percentage of shorts be forced to cover. Now, if the markets had crashed during that time, you would have seen a much bigger movement to the upside. That is a given fact. So I think everybody is on the same page of that. And that is why this Evergrande situation is so important. And given the state of our current markets, we're going to break all this down for you guys. But first, let's talk about Evergrande. And Evergrande, right? They have $82 billion of dollar amount of interest that does have to be paid out on their bonds due September 23rd. That is on Thursday. So if they do default, it's not that $84 billion of interest or defaulted interest is necessarily a big enough dollar amount to crash the markets, but it will really shake up investors. They will think if a company that owns 1,200 different businesses, essentially different programs in China, should be very diversified in revenue. If they are failing, if they are defaulting, that is the worst thing you can do, is default. If they are going through this, then who else is likely to go through this next? And that is going to cause an extreme amount of fear. And this is something the markets are going to be paying very close attention to, as well as Jerome Powell. But let's not get off topic. What do you guys know about fear in the markets? Let me tell you the most famous investing quote of all time. Be fearful when others are greedy, and greedy when others are fearful. Right there you have it. Fear makes the stock market go down. And that is why that is so good for AMC. If this does happen, AMC could even be seen as a hedge by some hedge funds and institutions that want to get in before the shorts are forced to cover. So that is the situation with Evergrande. All in all, they have about $300 billion of liabilities outstanding. If they do go underwater and go bankrupt, I don't think obviously this is enough to crash the overall markets. The markets are trillions and trillions of dollars worth of capital in investment capital in these markets. But it's going to cause that fear, and that is a definitive fact. And not just Evergrande per se. There is a lot that is going on in the markets. The second thing that investors are going to be watching for is Jerome Powell. The FOMC numbers do come out. So the unemployment numbers, the jobs that were created, that comes out on Wednesday. And then on Friday, you do have Jerome Powell expected by a lot of investors to talk about potentially tapering or to kick the can down further down the road. So I think this is going to be very important. This is likely already somewhat priced into the markets, but it's still going to be a very bad thing or a bad sign for investors if they are still looking forward to all of this cheap money and propping up the stock market even more. But regardless of that as well, we are at a critical technical level, guys. I don't want you guys to forget this whatsoever. This is the 50-day moving average on the daily candlestick chart. We have touched this 10 times. Now we did and only closed under this for 2 days since November of 2020, which the second time we closed under this was right here on Friday. The only other time we closed under this was June 18th when we had a nasty sell-off. The next day later, we did bounce back up. This was also on a Friday. So if we see a down Friday like we did see last Friday, and then we do see a down Monday in the markets, it is going to be very, very volatile. You're going to trigger a lot of stop losses to kick in with the trading algorithms that could push us over the edge. So really two things happens with the S&P 500. If we are still following this trend, we are going to bounce off of this 50-day moving average, hit an all-time high like we have seen every single time in the past we have done this, or we are going to drop under this and continue to sell off. And there is a lot of other things at play. We do have the reserve requirement ratios for the banks going up about 5 to 10% per bank. Just depends how over leveraged they are. Really, that came from the stress test. Over $1 trillion has to go from open markets back into the banking system. So you're seeing a lot of liquidity drying up. You're seeing the two Fed chairmen that actually did buy the dip all throughout 2020 and are now selling out of stocks. This was announced at this tipping point right up here, basically at all-time highs. They're putting their money into passive investments. Even though they didn't break any ethics codes or laws, they are deciding to do this to get ahead of any ethics codes they might be breaking whenever they do plan to sell out. But this is raising a lot of red flags with investors overall. So that is really what you guys need to know about the two things that that investors are really going to be paying attention to, as well as what you guys can pay attention to intraday whenever you want. Watch to see if the S&P does gap down under this 50-day moving average. I am definitely looking to make a trade on this if this situation does get any worse and to really hedge out my portfolio. So if you guys want to be notified in real time whenever I do make that trade or any other trade with stock options and crypto, check out the link down below in the description for the buy and sell alerts. But let's end off this video on the Ortex data, a little bit of technical action with AMC, and then the Stocko tracker data to see what we're looking at for next week. And let's start off with the technical analysis. Obviously, still in a very bullish uptrend, but we did have that downtrend. Obviously, last week we did drop about 10%, give or take, but we are still well above 4250, which is the first level to watch for to really break to the downside out of this bullish trend, but we're still well above $40 per share. That would be a downcline of about 12% coming next week to really break out of this bullish trend. So I don't think that's going to be the case. I think we are likely to bounce back up, either consolidate out a little bit further or gap up past $50, depending how hard the market does fall and how many shorts are forced to cover on their positions. Watch for the volume though. We have seen all last week relatively low volume days. So definitely watch for that in between about 50 and 60 million. Watch for this volume in between about 85 and 100 million to go back into the stock to see that continued uptrend. But overall, it's looking very, very good. We are still in this bullish rally. A nice, healthy consolidation phase like we did see last week is a good thing overall, and you definitely want to see that happening. But Talk about the Ortex data briefly. 18.62% short interest. We're seeing 95.24 million shares that are currently sold short. So a very large amount relative to the volume that we are seeing. That is very, very bullish. Share utilization at 88.13%. We have went down quite a lot since we were at that about 93 to 95% range. So this just means there's more shares actually available to be lent out and then ultimately sold short. But we are not seeing the free flow on loan being reflected that it is going up. So watch for the free flow on loan to have went up starting this next week. Monday, Tuesday, we should get numbers that do indicate the free flow on loan has probably went up about 2%, or either the short interest has went up about 2%, close to or over 20%. So looking extremely bullish. Something to definitely pay attention to is to watch the short interest continue to climb. But the Stocko tracker data, obviously, we're probably not looking at anything significant. We are looking at, about 13,500 for open interest at the next week's expiration date, 65,634 for out of the money calls. Obviously, in the money calls, 13,500. So nothing too crazy. This can happen very fast. We can see, more contracts start to be purchased, but I wouldn't expect any kind of potential gamma squeeze until January 21st. So hopefully this video cleared some air on some of you guys. Hopefully you know what to be watching for next week, and you can even track the S&P 500 for yourselves to see how bad we are getting on this downtrend. And just to say this again, this is the SPY S&P 500 index fund on the daily candlestick chart. If you are on Webull, just go to indicators, moving average right here, and then click on this little settings thing, and then you could type in your length right here, 50. And then I do have the 200-day on as well. Go to style, you can choose your color. So definitely check that out. Make sure you guys are monitoring that if you do want to potentially play the downside. But I'm not a financial advisor with any of this. The markets can be pretty crazy and sporadic, but what we all do know, be fearful when others are greedy and greedy when others are fearful. And it looks like there's a lot of fear in the overall markets right now, and we are prone to see AMC make some very volatile moves. So that is all for this video. If you guys do want to support the GoFundMe as well, I'm about to stop actually promoting this in the videos because we are almost at this original $1,500 goal. They have since raised it to $2,000, but she was in a rollover accident, had a brain bleed, a massive scar. So maybe in the next video I will show that. Hopefully I don't get shadow banned or demonetized. It is very, very bad. Probably you guys won't want to see it. It's really, really bad. But she's likely to make a full recovery, but it's going to be about 6 to 12 months at the very minimum before she could even consider getting a job again. She does have a son. So if you guys do want to check that out, linked in the pinned comment. But that is all for this video. Hopefully you guys enjoyed your weekend and you're ready for this volatile week with AMC. So that is all. I will see you guys in the next one.